Before you scroll, let me tell you something Wall Street will never tell you. Stock market crashes are not accident. They are designed to happen again and again. And if you don't understand why, you will lose money every single time. Stay with me for next few minutes because by the end of this video, you will see market crashes very differently than 90% of investors. Hit like button right now. It tells YouTube this is important. Quick questions. If market crashes are so painful, why do they keep happening? And more coming. Coincidence or pattern? Comment pattern if you have ever thought about. Greed always comes first. Every market crashes starts with one emotion, greed, not fear, greed. In the US, when markets keep going up, people stop asking questions. They don't care about profits. They don't care about valuations. All they say is, this time is different. That sentence has destroyed more portfolios than any recession ever could. If this sounds familiar, subscribe. You are not alone. Easy money creates bigger bubble. Let's talk about the real fuel behind crashes. Easy money. Low interest rates, cheap loans, free cash flowing everywhere. In the US, whenever money becomes cheap, people borrow more, invest more, and take bigger risks. Homes get overpriced, stocks get overpriced. Even bad companies start looking promising. When money is free, discipline disappears. Smash like if you have seen risky stocks flying up for no reason. Media and hype machine. Now let's talk about the most dangerous player, financial media. Every bull market sounds the same, new era. Technology changed everything. Old rule don't apply. Media doesn't sell truth. Media sells excitement. By the time the news turns negative, smart money has already left. Comment media if you have ever bought because of hype. Retail investors enter at the worst time. Here is the hard truth. Most crashes happen after the public enters the market. In the US, when taxi drivers, barbers, and random TikTok videos start giving stock tips, the top is very close. Retail investors buy near the top because that's when confidence is highest. Markets don't crash when people are scared. They crash when people feel safely. If you are learning this today, subscribe now. Leverage and debt, the silent killer. Now let's talk about leverage, the hidden weapon that turns correction into crashes. Margin trading, corporate debt, consumer loans. When prices fall just a little, leveraged investors are forced to sell. That forced selling creates panic and panic creates crashes. Like this video if leverage scares you. Psychology never changes. Technology changes. Chart change. Market evolve. But human psychology never changes. Fear and greed control market 100 years of ago. And they control markets today. If human emotions stay the same, crashes will always return. Type psychology if this makes sense. Why crashes are actually necessary. Here is something most people won't tell you. Market crashes are necessary. They remove weak companies. They reset valuations. They punish greed. Without crashes, market would collapse completely. Crashes don't destroy wealth. They transfer it. Subscribe if you want to be on the right side of that transfer. How smart investors prepare. Smart investors don't predict crashes. They prepare for them. They manage risk. They keep cash. They don't chase hype. And when crashes come, they buy when others are afraid. The market rewards patience, not panic. If you want more content like this, hit subscribe now. So remember this, stock market crashes happen again and again because human behavior never changes. If you understand this, crashes won't scare anymore. They will become opportunities. Like, subscribe and share this with someone who panic in crashes.